This is ShadowQuant, Market Brief, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, July 16, 2026, and this is the After Hours session. Now, let's get into it. Geopolitical shockwaves are driving a flight to safety that is crushing tech sentiment and testing the resilience of the yield curve. We are closing out a session where the S&P 500 held firm, but the Nasdaq 100 surrendered its gains as AI and chip stocks continued their slide. Let's get the numbers.
Here is the closing snapshot from Thursday, July 16. The S&P 500 tracked by SPY finished at $75.81, up 0.4%. The Dow Diamonds added 24 basis points to close at $525.95. The Russell 2000 IWM rose 43 basis points to $295.77.
Grid, that disconnect between the broad market and the tech-heavy Nasdaq, is stark. Let's see what corporate filings and earnings told us about that pressure.
Earnings season continues to deliver mixed signals, with a notable miss from Core Scientific after their fourth-quarter results disappointed the street. Meanwhile, Google's Gemini launch has been delayed as the company falls short of internal goals, adding to the headwinds for the broader AI narrative.
Silence from the AI giants while the broader market holds. Let's look at the macro forces driving this safe haven trade. Macro data is pointing to a higher for longer rate environment, fueled by geopolitical inflation risks. The Fed funds rate sits at 3.63%. The yield curve is flat, with the 2-year at 4.13% and the 10-year at 4.55%, a spread of 41 basis points. Pulse, that flat yield curve and sticky inflation create a difficult backdrop for growth stocks. Let's check the risk radar.
Risk is elevated. The VIX closed at 16.50, down 6 basis points from yesterday, but sentiment is in extreme fear at 14 out of 100. This disconnect between a low VIX and extreme fear signals latent volatility. We are seeing a flight to safety that is crushing tech sentiment. The Nasdaq's near 1.5% slide is a warning shot. Geopolitical tensions around the Strait of Hormuz are escalating, threatening key export routes for oil. This is not just a tech story, it is a macro regime shift.
Latent volatility in an extreme fear environment. Let's wrap this up with what's next.
Here is what to watch. First, the ECB rate decision at 2 p.m. Eastern today. Expect increased volatility as the market digests the divergence between Fed and ECB policy. Second, US retail sales and jobless claims will test whether the labor market is cooling or holding. Third, keep an eye on the technology sector, as any further weakness in AI names could drag the Nasdaq lower.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.